Good morning. This is Larry McMillan with a stock market update Monday, April 6th before the market opens. So last week was a bit disappointing in that the oversold rally got up to the declining 20-day moving average just barely and completely failed from there. Usually an oversold rally will continue a little bit farther than that. There's still a chance that it could, but that wasn't particularly encouraging. However, tonight's action, Sunday night's action, the market is up about 93 S&P points on, well, again, oversold, but also some hopefully positive news that the death rates are slowing. Anyway, a breakout over 2650 would help the S&P chart. That would be the first higher high, higher low pattern that we've seen since the decline began. And so that would be a positive. However, there is resistance there at 2650. And if we can't get through that, then a retest of the lows is certainly a possibility sooner rather than later. The equity-only put-call ratios, as you recall, gave buy signals about a week ago, and maybe a little over a week ago, and that was good. And the market did rally at that point. However, the decline last week has curled those put-call ratios back up again. And while they're still on buy signals, according to the computer analysis programs that we use, if they make new highs that are higher than they did 2 weeks ago, that will cancel those buy signals. So that's something that we're going to keep a close eye on. Breadth was terrible last week, and so both breadth oscillators are on sell signals. They're obviously in oversold territory as well, but again, oversold does not mean buy. Finally, it brings us to volatility. Volatility has calmed down. VIX is trading around 50. It's even slipped below that now. It's been below its rising 20-day moving average for about 4 days. So those are somewhat positive things. However, with VIX near 50, the market is still going to be very volatile, and you can have big swings in either direction. I think the thing that we want to concentrate a little more heavily on is the term structure of the VIX futures. It's sloping downwards now. April is the front month, and it's the highest price, then May, then June, etc. If that levels off and the term structure begins to rise, that would be a very positive sign as well. So to sum it all up, we're still interpreting this as a bearish market. You can trade oversold rallies. The things that would help get it out of the bearish market status, in our opinion, and we don't use those silly percentage numbers, we use indicators, would be S&P climbing above 2650 and the term structure flattening and going positive. So those are going to be tall hurdles to climb, but it's not impossible. So thanks for listening. Be sure to visit our website, optionstrategist.com. Our newsletters have been doing great in this market, and we also have a number of other things, including Saturday seminars once a month. Thanks for listening.